Hey guys, Nabil Khan here, and today's topic comes from a lot of requests on the channel, and it's just one of those topics that everyone kind of knows about, but it's not that important until it becomes important to you, more often when it limits you. And in light of the financial and economic uncertainty around us in a world where there's more debt than money, guys, you might be wondering whether you can even get credit, or how to get the best lending rates, or what a good credit score may be worth to you. So in this video, I'm going to be covering your credit score, what it is, how does it work, what do you use it for, what is a good credit score or not, is it really the be-all and end-all, how you can improve your credit score, and what you should be doing today to unlock your options for the future. So stay to the end of this video. How to improve your credit score, up next. Hey guys, welcome back to Money Talks, and if you're here for the first time, thanks for being here guys. Hit that subscribe button and send us some love by liking this video. So first things first guys, what is a credit score and what is it used for? Well, basically it's a number that's given to you, linked to your name based on how you manage your credit. And for the avid grammar fans watching this channel guys, credit meaning the money that you borrowed from an institution and or the money an institution lent to you. And now we can focus on the rest of the video, focus on the message on credit scores, guys. Actually, thank you very much for the guys that are commenting. It's fun engaging with you guys here on the channel. There's always room for improvement. Let's use this as an example to focus and learn where we can in life. This is how growth happens. Now back to credit, guys. Your credit score is used by credit providers to determine whether they want to give you credit or not. And if they are happy to give you credit, your score plays a part in what price and what terms they are willing to offer you, for example, your interest rate. So basically your score tells the story of your behavior with credit, how you've been managing your credit. And so the higher your score is, the better your standing will be when applying for credit, and the lower your score is, the more riskier you're seen in the eyes of people that want to lend you money. And so bottom line, a high score means you get the best rates, right? Not really. And that's because above and beyond your credit score, every single institution that you apply to for credit has their own internal criteria that they use with your credit score to determine the outcome of your application. For example, when applying for a home loan, the banks consider your application by looking at your credit score, but also your transactional behavioral history that they have, that they know about you, and putting those together, if it all adds up, you have a deal. And if they don't have your behavioral data, that's why they ask you to submit all of your 3 months bank statements and additional data so they can see your transactional history, look into it that way, look at your credit score, and then they can offer you terms. And it's also important to note that this whole game is a business. Credit is a business. They make money off you. Credit bureaus exist to make money by charging for the information that they share with banks, your data, and all these things considered, which means that you should always remember that you have bargaining power. Now with that in mind, seeing as your past behavior is set and your credit score does mean a lot in the grand scheme of things, especially when applying and you want good terms, how do you better your credit score? Here's how. A good credit score is made up of factors based on how you manage your credit. So if you manage those correctly, your score will get better. So the first one is the timing of your payment, the plan for your payment, and the amount that you're going to pay. Guys, it's honoring the commitment of the contract of credit. So you just have to pay what you agreed to pay on time and consistently. Now this is where it all goes wrong, guys, for a lot of people, because if you have the money normally, you'd pay for it, right? But if you're struggling to make payments, or a famous one that's a big problem in this country, telemarketing, where a lot of sales are done on credit and things are delivered without the person on the other end of the line knowing really what they bought into. This is a contract of credit. And so it doesn't matter if it's the right thing to do not to pay that company because they are wrong. It negatively affects your credit score because that company is going to report to the credit bureau and there goes your score. So what's important to do is just not miss payments or raise a dispute. If you feel like this is happening or you're wondering why your score is low, pull up your credit report and take a look at it. You might find payments that are due that you have no clue exist, and start picking up the phone and raising those disputes, because just doing that and settling the account, getting square with it all, will help your score. On to number 2, credit cards, revolving credit, or any credit that's open to use. You see, your score is affected by something called your credit utilization ratio, which basically is the amount that you're owing on all of these revolving facilities or open lines of credit at any point in time. A general rule in South Africa is to keep the amount that you owe on credit less than 35% of the limit. So basically, if you have a credit card limit of 10,000 Rand, you need to keep less than 3,500 Rand owing on that credit card at any point in time, or at least if you go over that, don't keep that amount owing for too long, or it's going to negatively affect your credit score. Other things that affect your score is the length of your credit history, guys. So this is how long you've used credit for, and the longer that you've used credit for, the more you come across as trusted to use credit. Also, having a mix of credit types, for example, a home loan, which is a type of credit, credit card, vehicle asset finance, and this adds to your credit history and usage. Think about it. All of these mechanisms to calculate your credit score are dependent on your story of managing credit. Different types of accounts, the timing of your payment, your behavior shows to lenders that you have a certain skill with managing the money that's lent to you. And so this is good faith. This is why lenders will continue to lend to you over time, today for a vehicle asset finance, tomorrow for a home loan, the next day for a business loan. And the last one that affects your credit score is the amount of applications that you make for credit. Basically, guys, how many times you apply for credit, how many times you click, let me see how much this costs, do I get approved for this? Even if you've been window shopping, so to speak, online on houses, vehicle asset finance, guys, what this is doing, it's adding to your history of behavior that this person over here always is asking for money, which means they must be high risk. So if you see the things that affect your credit score, it's quite logical. So what you can do today is pull up your credit score, think of it as a blank slate. You are where you are today, and your behavior can change that number. It can become higher, and you can be seen as a lower risk in the eyes of the institutions. But remember, guys, we're living in a world that has more debt than money. Debt is such a huge problem, so much so that there's something called a debt trap, where people are so deep in debt that they keep needing to borrow more money. And so, guys, as much as you want to be raising your credit score, getting a good credit score for the purposes of better rates in lending, remember, guys, credit, owing money to someone, taking money and using it for your lifestyle or whatever it is that you want to buy, is still a practice of using money that is not yours. And so with everything happening in the world, guys, I hope this exercise helps you to raise your credit score, to put you in a better position, but more importantly, reminds you that once you manage your debt and get it under control, you walk away understanding how the systems around us work so that you can make better decisions in your life with money, in the journey for you to live life on your own terms. And on that note, thanks for watching, guys. I hope you enjoyed this video. I hope it was logical enough for you to really understand the simple nature of credit and credit scores, and take this information through into your life. Share this video to help one more person. Guys, the best tips and feedback come from you guys, so let me know what you thought about this video in the comments below. Hit that subscribe button. Again, share this video, and I'll catch you guys in the next one.